Hi everyone, and thank you so much for your response, both online and offline, for your feedback you have been giving us through episode. And right now, we are delighted to bring you back another episode with DAR and Rene on inspiration.
Thank you everyone. We are back here again just for you.
Okay, and given the events that happened over the last week, I believe that you've got some more information about us, especially with regards to the American stimulus package which was released recently. So let's go.
Okay, my opinion is, once Biden signed in the 1.9 trillion US dollars, all right, just imagine there will be somewhat like 300 million Americans that will receive 1,400 US dollars each in the bank account. So how much is that? I think that's a huge amount of money. And in my personal opinion, I think at least a quarter to one third of this money will flow into the stock market.
Okay, but and that on that point, how is it going to affect basically the global market? I mean, you're talking about the US in itself, but what about globally? How is that going to affect everybody throughout the whole region?
Let's talk about US market, domestic market.
Okay,
first. So when I mentioned just now that it will go into the domestic stock market, right, the equities market.
Yeah.
So last Friday we have seen Dow Jones and S&P 500 closing at fresh record high. So this week, I would think that these two indexes will continue to soar and go for new historical high. So we will start off with the US market. Then from there, when it flow into the rest of the Asia, I think Singapore STI will continue to soar higher this week, and Thailand as well. And the rest of the market outside US will continue to do better this week, definitely.
Okay, so based on all those points which you just mentioned about, right, is it good or bad, and how can people out there benefit from the market movements? I mean, that's most important. I mean, everybody who's investing really wants to know how they can kind of get on board.
That's a good question. Right. All right. Of course, if you ask me, is it good or bad? I think when there are a lot of loosening money in the market, of course it is good, because number one, it has got more liquidity. Number two, then we always have to track, where does all this money go to? As I mentioned earlier, stock market, right? Then the second thing is basically, I think moving into the next 1 or 2 weeks, commodity prices, okay, is going to be one good sector that every trader should be looking at. All right, because after the stock market rise, the next thing that will continue to track probably will be commodities, like the food commodities, metal commodities. Of course, not forgetting gold, which we're going to talk about gold later. All right. If you look at other metals like copper, aluminium, all right, they have been doing trading at a high, fresh record high for last 8 years, 11 years. Continue to track all these commodities. I think it's going to pay you well.
Right. I mean, with commodities especially, I mean, like you mentioned, there's a whole basket load of different commodities people can get into. So any specific markets where you think has more potential from one or the other, or it's really more of like a commodities in general?
Well, I think if you look at metals commodities, of course you always start from gold, silver, and not forgetting copper and aluminium. All right. Yeah. Then the other commodities, I'm not looking so much on the energy side like crude oil. All right, but I think you should be looking another very special commodity like rubber, maybe coffee, sugar. I think these are all the alternative commodities that a lot of people are not paying a lot of attention to. But trust me, they're going to pay you well. Okay.
Okay, so let's jump into our next question then. Currency traders are keen to know more about in the post-stimulus period. What's your opinion on that?
Wow, Rene, I got to say, today you gave me all the good questions.
Well, that's the feedback we've been having from our viewers. So
okay. Let me just talk a little bit on currency, right? So when we are talking about US stimulus, 1.9 trillion, that's a huge amount rolling onto the market.
Yeah, it's a lot of money.
Yeah, a lot of money. So we are coming to mid-March, okay, end March, and eventually going into April. Starting from late March to early April, I foresee that the dollar will start to weaken because of the printing of huge amount of money. So once dollar weakens, right, what will be the alternative currency that will be used to counterbalance US dollars? All right, first of all, we talk about euros. So your question is, what are we going to look at currency? Number one, euros has got a lot of potential to strengthen. All right, of course, a basket currency, we just look at one or two that are really potential. So besides euro, number two, we are looking at Canadian dollars, or we call the loonies. I think these two are good enough. Hey, one more thing, Japanese yen. Take a look at that. Yes.
So these are basically the kind of major currencies that are kind of like being highlighted.
Major currencies that used to counterbalance US dollar weakening, and also because Canadian loonies will rise because also a little bit on the strengthening of the oil prices that tracks back to commodity sector that we mentioned earlier, right?
Okay. All right. So let's talk about the last question that we have for you, and I think this one is something everybody's going to be jumping to know more about. Let's talk a little more about gold and BTC or Bitcoins. Many people have been settling up on investment portfolios, like you mentioned earlier, and gold is with being a base instrument and everything else, and it's really, I think right now with the news that came out last week about Bitcoin hitting all the highs, right? What are your views on Bitcoin and gold? Again,
fantastic questions. Okay, I think gold and Bitcoin together, right? Let's take a look at gold first. Gold prices. All right. As I mentioned earlier, gold prices will start to rise very soon. Okay, which I think anywhere like perhaps early April to mid-April, another 1 or 2 weeks from now. And for those people who got interest to invest in gold, I think this is a very good time for you to find an entry, because gold is a perfect instrument for beginners. For people who want to start off, and don't know how to do it, don't know where to do it, and what should they invest, I think just go into gold. And in SGX, in Singapore Exchange, there is a gold ETF. All right, the symbol is SPDR. We call it Spider Gold. It is denominated in US dollars. I think this is a good instrument for all beginners or people who want to keep some gold in their portfolio, because going into the year 2021, the whole of this year, when dollar weakens, gold is definitely another instrument that will pay you well. So
gold has been trading off its highs from as of late. Am I correct, or is it still?
Yeah, it has traded off from the high.
Yeah, off from the
last year the high was 2,070 US dollars. Right. It has come down to about 1,700 US dollars per ounce. So now is a good time. All right, find an entry to go in. I would foresee by mid-year. All right, sometime in June or July. Hey, that's my birthday, man. June, man.
Okay.
So gold prices in June will recover back to $2,000, and perhaps it will start to fly higher. That's for gold.
Okay. What about Bitcoin? Come on, let's get to Bitcoin.
Oh, Bitcoin. Yeah. Bitcoin is really a good topic. Yesterday, it has done a new historical fresh high at $60,000. The whole world got hysterical.
Yeah, I saw Elon Musk getting all excited.
They are hysterical, and everybody started calling me, say, "Wow, how are we going up, or are we going to see the prices going up higher?"
Right.
But just be a bit more cautious. All right. Of course, that's my personal opinion, so I want to put a disclaimer again. Right. Although we see the prices going to new high and beating the last high 57 or 58,000. Okay, technically we call this a double top. All right. Besides double top, I also discovered that the market momentum has weakened. All right.
For Bitcoin?
For Bitcoin, yes, for Bitcoin. Okay, now I track back the earlier few questions that we mentioned. This week itself, I think most of the fund will go into stock market, then followed by gold prices, and Bitcoin most likely will retrace. It will do a small correction. Okay, and at this moment, it is trading at $60,000, but be very careful that it could be a bull trap. All right, to get people to get the market,
to push the market higher.
Yeah, then after they start to fall, and everybody will start to cut off.
Exactly. And
so be more cautious, because the market is very volatile. All right, and continue to watch the market. I personally still suggest, if you have an interest to buy Bitcoin or to get into this market, wait a little bit longer, another 1 or 2 weeks. Observe. All right, it's never too late.
Okay. Well, Dar, I think everybody out there really appreciates your insights, and I think we basically have a couple of minutes, and before we sign out, I have a couple of questions which we receive from our platform, so I'm going to quickly dive into them. The first question is from this gentleman called Randeep Singh, and Randeep's asking, can you give me some more information on financial futures and what to look out for, and what would be the right investments for him to get into? That's from Randeep Singh.
Well, I think financial futures, number one, we have to understand this is a leverage instrument, regardless of what is the market about. All right. So when we talk about leverage, of course, it comprises a certain risk factor involved. So before you trade any future instrument, I think you should be looking at the contract size. That's very important. Usually, any contract size of a futures instrument that is worth above $100,000 per contract, okay, it will be considered as a high risk instrument. All right. Then secondly, I think you should be looking at tick size, whether you can have such a high risk tolerance.
Yeah, then I think that's something that risk appetite.
Because people who trade futures, you'll be surprised, a lot of the beginners, they don't understand risk factor, risk appetite, risk tolerance. Then of course things like last trading day, whether it is cash settlement or physical delivery, all these important things. I think any futures trader wannabe should start looking at all these things first.
Right. And I think that goes in general for any kind of investment portfolios that you could plan on getting into.
Definitely.
Make sure that you're comfortable with with the financial risk you're getting into.
Yes.
Exactly. Before you dive into something and realize that you don't have the margins to handle the investment.
Play the market that you can contain the risk.
Exactly. All right. So let's dive into our next question. And this one is from Sarah Fu. Thanks, Sarah. Sarah's asking, what's some top tips for first-time investors? I think that's kind of that's something everybody's been asking.
Everybody wants tips.
Yeah.
Okay. As I mentioned earlier, this year we're going to see gold prices going higher because of US dollar weakening. All right. Gold is definitely a perfect hedge and a safe instrument for all the beginners. All right. There are a few ways to invest in gold, which I know, Rene, you're going to ask that. Okay. Number one, of course, if you want to be involved in higher risk, you can go into a gold futures or maybe spot gold margin trading. But I think for investors, you should be looking at ETF, okay, where there's no leverage and you pay down the capital. So are they safe? Yes, they are very safe. And this Spider Gold ETF is trading simultaneously in Singapore Exchange as well as New York Stock Exchange. I think you should be looking at this. All right, Sarah?
All right. So, well, I think that's all the time we have for. We want to thank you so much for all your questions. And please do keep them coming. All right. DAR will be more than happy to answer any questions that you be having and you be asking for us in our next episode. Till we catch you again.
This is DAR.
And I'm Rene.
Signing out.